Hello trader, welcome to the live session from Forex Trading Wizard Academy. Very important day for learning because today we see that comparatively low volume, but still the market is on some of the instrument so this is a great day for reflection and learning. And if you guys are relaxed, then that's a very good time. We will be learning a lot here in this live session, along with if there is any volume coming in the market. Also, we will be looking for entry. So for those who are passionate about trading, and I'm sure that you are here, let's begin another trading day here for this quiet and relaxed day, which is good to trade, to look at for especially learning. And also you see that XAUSD is close today, so we will be looking for the pairs dollar yen and dollar CAD. So these two instruments where I was looking at, dollar CAD and dollar yen, looks the market potentially moving here, so we will keep eye on both of this instrument. If you guys are looking at any other instrument, also you can share your thought on that. So let's begin with some important lesson, as well as what we can learn in this live session. Also we'll be discussing on, including developing trading psychology, understanding the technical analysis, as well as what is the best level that to trade. And yeah, as I mentioned, this is a very important time for learning, as during the volatile market we focus on trading. Today we will be focusing on more on learning. And you know that if you find a fisherman, when there is a lot of fish in the market or in the river, then the fisherman will be busy on fishing, and you will end up getting one fish for day that you'll feed yourself. Next day you'll be starving. But the day the river is quiet is the day you can learn how to fish. And that's what we will be learning here today, how to fish. And I'm here waiting for confirmation that the sound is going. If you guys can hear me, you can say on the live chat that you can hear me, and you might be able to write yes or no. So dollar CAD looking at, and also dollar yen. Let's keep the USD pairs on the list. So looking at here, dollar CAD, Gbpusd USD also in a trend, euro dollar trending. So euro dollar as well looks to me possible trend. We will be looking at that one as well. So whichever instrument showing the trend, we will be. And euro dollar looks to me that there was a multiple liquidity gap yesterday. You have seen that with this news. So euro dollar as well may try to revert back to the upside here. So let's first look at euro dollar, and then we will be looking at other dollar pairs. Looking at the monthly chart, I'm going to do a full multi-time frame analysis here, and then after this multi-time frame analysis, we will see that how we can find potential entry, and then we will be focusing on learning as well. So let's begin this. Welcome, thank you. And also let me share the link on the live chat. So let's begin this trading day here, and what we can see from the I'm looking at euro dollar, and then also we will be looking at other instrument as well. So looking at euro USD, this is the monthly price section where there is a monthly impulse here. You can see this is the monthly impulse with a huge gap open on the monthly. Just looking at the overall picture, and with that monthly gap open, we can see there is a gap open on the monthly, and with this gap open there is a bullish impulse here on the monthly, followed by last month we have seen a huge bullish engulfer in this market, so on euro dollar. Now with that bullish engulfer, the market has made its move towards the upside with a monthly bullish impulse. And from the weekly chart here, we can see that this is the weekly price action. There is weekly, also previous week a massive bull candle. This week we can see there is a weekly low. Is today's weekly low is here, and this is the weekly high here. There's a gap open, and with the gap open, expecting for euro dollar for the market to come down here, retest, and then to bounce back up again to create a new high here. So you can see that euro dollar from the weekly showing that bullish market structure. Looking at the daily, here we can see that from the daily, this is the daily price action where there is a daily bullish impulse followed by a narrow red candle yesterday. So this yesterday's price action on euro dollar is a pullback. So the price is potentially moving in a sideways, but at the same time forming a trending market structure on the lower time frame that we can see. So if we look at here, this is the resistance on euro dollar from the daily, and here expecting for the market to come for a pullback and then to bounce back up. From the 4 hour here, we can see this is a 4 hour doji here, followed by another 4 hour bullish engulfer, expecting for this market to potentially bounce back up and then to create a new high here. So looking at the 1 hour and this price action here, but you can see that there is an inverted head and shoulder, and then with that inverted head and shoulder, the market is at the moment in a bullish trend. So dropping down to the 15 minutes price action here, we can see this is the 15 minutes bullish engulfer here on euro dollar, and that 15 minutes bullish engulfer is quite significant. And with that 15 minutes bullish engulfer, what I think that the price may potentially bounce back to that long-term resistance here on euro dollar, which is a pretty important level. And with that being said, here is the 15 minutes price action on euro dollar and some of the levels that we can look for possible retest. This is the bullish engulfer here, and here if this market breaking any of this swing low here, dropping down to the 5 minutes, and it's the market trend is maintaining that bullish market structure, any coming back any of this low will be look for bullish entry. So we see that euro dollar CAD, they are slowly trending at the moment, and we will be looking into those instruments to see how they are. Good to see you. Welcome. Thank you. Yep. Let's see here on now euro dollar. We will be looking to see if there is any possible entry opportunity in this market here in that area. So, and also we will be fully focusing on the live trading, if you guys look at, as well as the education coming with it, which is very important to look at when we are looking at the market. So here is what we can see, that on euro USD. Now here is the market structure. From here we can see there is a bounce and pullback, and we can see the market is in another phase here on Euro USD, wanting to see the market to potentially break below here and grab the liquidity, and then to trend potentially back to the upside. This is what we're looking for, possible entry opportunity in this market here. So any breakup structure is where we can look for entry on Euro USD. And in the meantime, also because it's in a local uptrend, would like to see that it has come back to any important level before we look for any entry opportunity, as this instrument is quite liquid, and we can easily get a position once we see that the market has come to this kind of levels that we are looking at the moment on euro dollar. So in addition to that, also we are focusing on the educational part today. So let's get into that point of education on euro dollar to see how we can learn and grow as a trader. Now, the first thing, if you guys are here, that means that you are really passionate about trading, right? So let's understand let's answer a very important question, right? Is trading hard, or what is the strategy? These are the questions that I used to ask, and I believe that you guys also asking. Is trading hard, or what time required to become a profitable trader, or what strategy you need to learn trading, right? So these are some fundamental questions that every trader asks. And in the meantime, if you guys enjoying the live session, I would appreciate if you give a thumbs up, make it to the live to almost same as the view. And now if we look at here, that when we are opening any position, the most important part here that we need to look at is risk management. So this is what we will be learning today, how to manage risk, and also we will be learning how to calculate the lot size, which is a part of risk management. Calculating the lot size, risk management, and developing trading psychology. So these are some of the important, very important part of becoming a successful trader that we will be learning in this live session. Now, no matter how big your trading account or how small is your trading account, if you guys paying attention, this is gonna be very easy to grow and to become successful as a trader. So the risk management is the first part that we will be discussing, and the lot size calculation, which is part of risk management, followed by how to develop the trading psychology, along with the trend trading that we can see here. So welcome. So what is the important part of risk management? Can anyone define or understand what is risk management? Okay, so how do you understand the risk management? As trading is always, there is a risk here. There are many ways a trader can manage risk. Depending on what kind of trader you are will determine how you will be managing the risk when you are trading. So if you know that how to do the risk management, you can trade in any account size, from that $100 account to $100,000 account or $1 million account, because you know that how to do the how to calculate the lot size, how to manage those trade that you are running, as well as emphasizing on trading psychology. Now, to understand the risk management, let's first understand that what is in fact risk management, right? So which is a very important concept or very important part of a successful trader's trading strategy. Now, what is risk management? This is a question that we need to ask very fundamentally. What is a risk management? So risk management is your risk exposure per trade in the market. That is, in one way, the risk, how much you are exposing to the market, and then once you know that what's your risk, then managing it accordingly for each trade. That is the key of understanding the risk management. Now, risk management can be many ways depending on your trading strategy. If you are using comparatively bigger account, then you must be able to manage the risk accordingly. That means that how much percentage of risk you are taking for each trade, and when you are closing the trade, how much profit target you are having. These are very fundamental part of risk management, and we will be discussing in depth later. And then the lot size calculation, okay, which is many traders miss that part, that lot size calculation, which is essential to become a successful trader. So lot size calculation, if you don't have a lot size calculator, then I highly encourage you to get one. That means that when you are opening a position for each trade, what is your risk for that trade? Now, why it is essential to do the lot size calculation? Let's understand it. Now, looking at, if you guys look at here, for example, we have opened a trade here in that area, and your stop loss is below this low, and we are not opening any position, just we are discussing it here, and your TP target is here. Now, if you open another position here from this, and your stop loss below this low, and let's say your TP target is here. Now, why it is essential to do the lot size calculation, which is that we will be learning here, is because let's say you open two trades, one from here, one from here, with the following stop loss here and also the stop loss here. In the two situation, you have opened those trade here. Okay, so one is here, the other one is here. So because you have opened positions in both situations with a, now in this trade that you have opened, for example, your stop loss is 18 pip. Now in this trade, your stop loss is 6 pip or 7 pip. Now, if you are opening here, let's say you open one lot in this trade, and you also open one lot in this trade. If you're opening the same lot on both trades, okay, so there's one here, there's one here, and then if you open same lots on both trades, then what happened that you probably lose that trade, that and then you win this trade here. Okay, so because your lot is same on both position, in this trade you are losing, let's say if it is per lot $10 as an example, then you lost here $180. Okay, so let's say you lost here $180 in this trade. But in this trade here, because your risk is 7 pip, you have, and your win here, let's say further if you do somewhere here even 2 to 1, if you are winning this trade, then you are winning 13 pip. Okay, so you win 13 pip, that means that $130 you win. So what happened is that you have lost one trade and you have won one trade, even your risk reward is very high, almost more than 2 to 1 in this trade, but it's still your minus is $180, your plus is $130. So which is, in both situation you're gonna be having in a minus in this situation as well as in that. And that is why it is important that always use a lot size calculator, which is very essential to become better as a trader. So this is a very important part of becoming a successful trader, doing the lot size calculation. And once you do the lot size calculation, you can easily find out when to enter, and then trading based on the proper strategy, which is essential to become successful as a trader. So which is in a, if you guys look at it, you can see this is a, in terms of calculating the lot size and all other stuff. So with that being said, now if you guys look at it, you can see this is a very essential part of risk management and becoming better in trading, which is essential part of successful trading psychology. Now once you understand the risk management, you understood the lot sizing, the next part that we need to look at is the trading psychology. That's what we're looking at in the next areas of trading, which is developing a trading psychology. That's what we will be looking at now at the moment. So before we go to that, let's see what's happening with the market. That we can see that from the, this is the 4-hour chart here, and in this market the price is in a bullish momentum. We can see the lower time frame bullish price action here. We can see also here on the lower time frame which is trending with a stronger momentum here, where you can see that euro dollar is in a bullish trend starting from here. After multiple liquidity gap, we saw that bounce pullback, another bounce, deeper pullback. The market is in another bullish trending phase on euro dollar. And with that being said, if we look at this market in that situation, we are seeing that the market is trending and moving back to the upside to this liquidity zone where there is a high liquidity in that area. So with a bullish engulfer, we can see 30 minutes also form a bullish engulfer here in this 30 minutes time frame, with another bullish price action in that area where the market is trending heading to the upside to create a new higher high here. So you can see that euro dollar is in a bullish trend here as well. The market is approaching that liquidity zone where the price has formed an inverted head and shoulder with a possible bullish momentum with this inverted head and shoulder, and expecting for this market to potentially trend back to the resistance line where there is a high liquidity in that area. So if you look at here, you can see 1 hour and the 30 minutes in all this lower time frame, the market is in a trend, and there is an inverted head and shoulder as you mentioned, and also there is a 30 minutes liquidity grab here. We could see the market to potentially trend back to that resistance line, and with that trend back to the resistance line, expecting euro dollar to potentially going back up to that highest point where there is a liquidity, and that's what we're looking to see on euro dollar for the market to potentially remain bullish with this inverted head and shoulder. A strong breakout with that inverted head and shoulder, we could see that pullback and the market to potentially trend back to that resistance line. This is what we're waiting to see on euro dollar, and let's wait for a possible entry opportunity in this instrument as the market is in a local uptrend. Any breakup structure can give us possible entry in this instrument. Raj, why Euro USD has so much spread? It's because of the low volume. What about large regular head and shoulder? Okay, so it's because of the spread. Today there is a low volume, and we are mostly looking at educational side of it. Yeah, most likely due to Gbpusd bank holiday. Yeah, so today is bank holiday in many region, as well as you know that so we see that low volume. So this is today's focus is mostly on education. Now what we have learned so far, guys, how to do the lot size calculation. I'm sure that many of you have understood that why it is so important to do the lot size calculation. Because of that reason we are looking at, and this is what we have learned that we may not be able to learn during the weekdays, or even if we learn, you guys will see that there isn't enough time that we can see for that. So, and because of that reason here on now you can see this is Euro USD here. It's in a bullish trend, and looking at here is the 4 hour. You can see there is a doji. We may see that the market to potentially trend back to the upside here, and we may see that the market to trend back to the upside here. That's what you can see for the price to move back up to that liquidity zone. And with the inverted head and shoulder, you can see the market is having that trend. So as this market is having that trend, because it's having the trend, we will be waiting for that breakup structure in this market. So we'll be waiting for that possible breakup structure here. And once we see the market has dropped to that support, that's where we will be looking for that entry opportunity in this market. So we can see here that the market to possibly drop down for deeper liquidity grab and then to trend back again, as this market is in an uptrend, and we might see that trend continuation where it's moving in that direction. That's where we look at for possible entry opportunity in this market. So here is what we can see, that the market is making its move. Like to see the price to drop again and then to possibly to return back again to the upside to create a new higher high. Let's see, how are you guys going? Thanks for resolving the query. Welcome. Can you do XAU? And now today market closed for XAUSD, so you don't have I'm not sure about you. It's closed for today. It's not trading, so we will be leaving it here. And for the next day, we are looking at today euro dollar. And if you guys looking any other JPY pairs, then you can also share your thought. I think dollar CAD as well trending, but euro dollar is where there's a possibility for an opportunity in this session. So along with our learning here, which is essential, now looking at here, you can see this is a level here where there is a resistance, turn support, and resistance turn support. That's where from the 1 hour here we can see the market in that zone where there is a 1 hour candlestick pattern. We may see the market to bounce back up here. That's what we're waiting to see. On euro dollar, we can see there is a drop, and depending on your spread is very important today, because there is a little bit of widen spread. So, but not too high, because as with the NY session, we should be able to see some volume coming, and that's where you see the breakup structure here on euro dollar. This is what we're waiting to see. The market has broken here in that zone where there is a liquidity, and And here is, you can see this drop here. Okay, so this is the 1 minute and the 5 minutes. And with this drop, expecting it to come back to any of this support level. And with that drop, with the support level, expecting for the market to come back here, grab that liquidity, and then to bounce back up. So we have learned that one on the risk management. We have learned the lot sizing calculation in this. How VWPS indicator for trading, sir? No, I don't rely on any indicator other than what I use. The best one that I use for my strategy, as well as 10 and 20 EMA. So all my strategy is purely based on price action. Only 10 and 20 is considered for a possible a reaction in that. So indicators are just some confluences. I never rely on an indicator for opening any position. And that's what we are looking at on euro dollar, that the market is here, would like to see a deeper drop. Now, what we see in trading is very important, guys. Also, it's very important that we rely on what we see only. Okay, so this is what essential in the trading, that we rely on what we see only. And not what we hear, right? You'll see that there's a lot of things that you might hear in the news or many others. Yeah, we can assess that information. But the successful trader, professional trader, rely on what is visible. Okay, it's very important. Why? Because what we see is what is happening on the other side of the market. When we are a trader, we are actually being a participant in the market to buy or sell something, right? And when we are buying, someone else on the other side is selling. When you are selling, someone else on the other side is buying. And when we are looking at those candlestick pattern, so if you look at here, this is the, let's say this is a 5 minutes candlestick pattern, a bullish candlestick pattern, and that bullish candlestick pattern on the 5 minutes is where the information, right? So which is essential to know that the information, what is that information, is what the buyers and sellers are doing on the other side. That's the order. So that means that when the price reach from this level to this level, why it has reached that much is because there is a liquidity gap, and smart money bought this market, and then from this level to this level, the price reached that height for a possible upturn in that area. And that's what we are looking when we are opening position. And I hope that you guys can hear me here. All is going well. The stream is well. Thank you. Okay, so now that means that when the price was here in that level, in this area, 1.1371, to the price reached the candle close at 1.1379, which is around 8 to 9 pip move to that level. Why that elevation? Why that the price has moved to that level? Can anybody tell me that why the price reached from 1.1371 to 1.1379 level? What was the reason behind it? So that's what the curiosity, and that's why those who has a high level of intellectual curiosity become better trader. Okay, so if you want to be a better trader, then the first thing to develop is intellectual curiosity. That means that asking a lot of questions, why this happened, why the price moved that far, why it didn't move that far, which is very, very important. And from that perspective, if you guys look at it, you can see the market made it move from this level, price level, to this price level, which is essentially a bullish move. And why this move happened? Very simple. When buyers buying, the market will go up. So you might say, okay, I sold as well. I saw that many institutional trader is selling, but it's still why the market is going up. It's not about only buying and selling. It's about the summation of buyers and sellers volume. So when more buyers buys than the seller, the market move from certain level to the other level. So what does that mean? You might say, okay, it's a very simple calculation, I understand it, but why do you need to know that? Right? Why it is essential to know that? Is because when a trader knows, or when you know, or anyone, that there has been more buyer than the seller, when it establishes from the information, from the candlestick pattern, that we know that this is what happened, there are more buyer than the seller. When this information establishes, the market prepare for that move. Okay, so, and that's where the opportunity comes for buying. Okay, so which is the essential part that we need to look at. So if you look at here, you can see that with this green bull candle, when the market grab that liquidity, when you see the market grab the liquidity, made this move, the buyers bought than the seller, the information tells that in this market the buyers are in control. And which is the basis of buying. Now here is the mistakes that made by many traders, that let's understand it, what the mistake make. Now what I would say that from a common sense perspective that we look at when you go to the shopping center or supermarket, what we do is when the price goes up or the price goes down, we tend to buy. But here is the other way around. Here, when the market moves up that much, we sell, right? So that's where so when the market goes up, that means the buyers in control, and the market that is the buyers in control, that's where we look to buy. So understanding that will give you a very clear idea of how to trade the market, because we don't want to end up selling in a market that is bullish. So when the price is going up, that means that it's the buyers in the market. In that market, we only look for buying. Okay, the market that is in the control of the buyers, we will be only looking for buying. The market that is in a control for the sellers, we only look for selling that market. Now, with that being said, if we look at here, you can see this is a 5 minutes candlestick pattern on Euro USD. Now, with this 5 minutes bull candle, the market grabbed liquidity and started to trend again. So in this kind of price action, in those kind of market, we only look for potentially, you can see this is a very important support level here. And in those kind of market, we only look for buying opportunity. As we see, this market is the buyer's market. And when a market is the market of the buyers, we only will be looking for buying. Okay, so understanding trend will give you a huge edge in the market, either to buy or sell in that market. I hope that you guys understanding it, found value in it. Make sure you give a thumbs up, guys, if you're enjoying, and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every single day. I'm in Eurusd buy. Can you have a look at it? Euro GBP. May have a look. Today we are looking at currencies. Looking at the multi time frame. I think Euro GBP in a pullback, as we have seen that there was a break with a momentum on the 4 hour, followed by consolidation and sideways, and there is a doji. If we look at on Euro GBP, this is a structure formation here, and in that market on Euro GBP, as this market in a consolidation, we could see that Euro GBP after a pullback potentially could have a bearish move, but at the moment for short term we see that Euro GBP is in that move. So from that point of view, though it is a bull market long term, but we might see short term possible drop on Euro GBP. It might go up for a pullback and then could come back here again, depending on what time frame that you have opened the position will determine. depending on. Let's look at the again going back to USD pairs. So looking at Euro USD, we can see that here is the local bullish trend here. Let's understand now, as you can see that this is the lower time frame on euro dollar, which is currently in a consolidation, in an uptrend. We might see that possible breakup structure that we were waiting. Thanks, sir. I won't keep it up for too long. I entered too early. Stephen, I'm also in Euro USD buy. Okay, so Euro USD is currently trending. It's a long-term bull market, but Euro GBP could be, because it's relative to GBP. So even if you see that Euro USD is bullish, Euro GBP could be bullish, could not be, because it's with GBP. So it's a two different currency. It will depend on the GBP strength. It's a minor pair, but yeah, depending on where you bought and what is the strategy, which is essential to know. Looking at again Euro USD, now we are waiting for a possible breakup structure and then to potentially to trend, and that's where we could look for short-term entry. These are some of the levels that we will be looking to see for the market to break and then to trend. Now in the meantime, guys, also if you are enjoying the live session, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I'm posting every single day. Now we also will be looking at we will be understanding the trading psychology part of this, which is very essential as a trader to look for developing a healthy trading psychology. Now looking at, when we look at the trading psychology, what do we need to focus on when we are trading, which is having a very important strong trading psychology. Now a trader's success depend on a large percentage of trader's success depend on his or her trading psychology. Okay, so I would say that almost half of one's trading success, if we divide the other half, strategy, capital, and risk management, other factors, alone 50% will be, or more than 50% will be depending on the trading psychology. Now this is also the less emphasized subjects that most traders look at in terms of trading psychology, that when traders trading, they emphasize very little amount when they were looking at the trading psychology. Now how do you identify if you have, or understand if you have the trading psychology that you need to become a successful trader? And also, if you, depending on your trading psychology, will determine how quickly you will become better in trading, which is essential part of becoming a trader. Okay, we see that breakup structure here. With this head and shoulder, the market is breaking below here. We would like to see that it dropped to an important support level. So 4-hour candle closed, and you can see the market again breaking below from that 4-hour level. And so as this market is trending, if you guys look at it, you can see it's a more correction, more deeper correction. It's in an uptrend here, and with that uptrend, so would like to see that complete breakup structure and then to return back again in the major direction of the trend. That breakup structure is essential, because that's how you will be able to know that the market has come back to a level that the buyers can be interested again. While we are looking at that point to possibly to find an entry, let's again explore the depth of trading psychology. Exploring the depth of trading psychology is absolutely important, because by developing a sound trading psychology, we develop a very good trading habit. Now, from that perspective that we can look at when we are looking at the market, or when we are looking at our trading, to be successful as a trader, we need to develop healthy trading psychology. Now let's understand that what it takes to become a trader who has a healthy trading psychology. 25 minutes. No, I hope it keeps push them. Yeah, so we could see that before the NY session. Okay, so now here is what we can see after this breakup structure. Would like to see it has dropped well below. I think it begins here. Okay, so here what we can see, yeah, it's breaking below that level. So with the NY traders coming in the market, a little bit of volatility. Okay, so that's where the market is grabbing those liquidity in that area. There is a little spread widening with the volatility, so which is basically grabbing that liquidity for possible movement when the market comes to an important area of value. Is more often you see the market do that because of that reason. So with that being said, euro dollar, we can see here possibly breaking from the structure, and we might see that liquidity grab and then to trend again back to the upside in that market. So now looking back to that part of healthy trading psychology, while we are looking at the chart for the market to come to an important level. Now, what is the first component of healthy trading psychology? The number one component for a healthy trading psychology is emotional resilience, right? So emotion is having an emotional resilience, or being emotionally resilient is the number one priority, or the number one criteria to become a better trader, because trading comes with a huge emotion, and where there is emotion there is attention, right? So that's how it happens. When we have a stronger emotion behind any trade or trading account, you see that more often it becomes very difficult to get those trade to its full potential. So how can you become that resilient to find the trade that you need? How can you develop that emotional resilience as a trader, right? So let's understand it from also the brain perspective. Now you know that you all have that brain, right? And what is that here? This is the front part of the brain, which is the frontal lobe, amygdala, and the reptilian brain here. Okay, now all this emotion is here. Okay, so this is the midbrain that generates those emotion when we are trading, either in a smaller or in a bigger account. Now, to become resilient in that emotion, the only thing that we can do is facing it. Okay, facing it, giving it more and more experience, right? So which is a very important part of becoming better in trading, because what kind of emotion in fact we experience when we are trading also very important. You know the two major emotion, that the emotion of fear and greed. These are the major two emotion that we experience when we are trading. There is another emotion that no one talks about, but which is boredom, right? It's a kind of emotion that you can say boredom is a feeling. Boredom is worst feeling that can one have, and that's a big player of losing in trading, because trading is boring, very boring. It's not fun, but we make it fun here in this live session. That's why you guys here. But if you want to be a trader alone, is the worst boredom that you can face when you become a trader, day trader. Okay, sitting down alone, and no one gonna be even giving you the company in that situation, unless you have a community that you are engaging with virtually. That's why we have our trading community, that many traders talking, sending charts, developing that experience, which is very important. Now when we see that there is a boredom, there is a lot of trade that may not work out in your favor. Okay, you'll see that more often traders make bad decisions because of the boredom. And when it comes down to having boredom, more often traders take a trade that just to get that excitement or just to trade without without meeting the entry criteria, without looking at the strategy, with all of that. And because of that reason, it is very essential that as a trader we be very aware of the boredom. And the other emotion that we face is the emotion of fear and the greed. Now, when does that emotion of fear and the greed plays out is also need to know very essentially. Firstly, when do emotion of fear comes into play in trading, right? So fear comes when we think that when the trade is not going well, we might experience the emotion of fear, right? And when we think that trade is not going well, we experience fear, emotion of fear. When we see that trade is going well or going in the profit target, near to the profit target, we feel greed. We become greedy for more profit. But it's the other way around. That's where actually we need to understand that how the fear plays role, so that you can be aware of that in your trading. So fear doesn't work when we don't put the stop loss or trading in a direction where we don't want to go. Fear comes in an area or zone when the trade is going in the positive direction. So what kind of fear is this? So if you guys look at it, you can see that, let's say market, a trader open a trade here, okay, and then buy trade has gone to, let's say the profit target is $500 or $1,000. If we do get the $500, then the market will never go in one. Sometimes if you're lucky enough with a spike, it might go to the profit target, which is rare. But more often you see the trade will go certain direction and then pull back, and then it will go again and then pull back, and then it will go again and then pull back. So which is basically the market goes up and down. So it might go to $50 profit and then coming for a pullback to $20 profit, and then maybe it's gonna go again $70 profit, and then could come back to again $10 profit, and at some point you could see minus $20. So the market moves in that fashion, going up and down, doing different movement in different direction. But when we look at that, the market is having, at some point you could see that when the trade goes up to certain profit level and then return back, you could see the market sometime will hit the stop loss and might be taking you minus $200 in a single trade. And that's where the brain started to recognize that when next trade opened, probably has gone to the $50 profit. Next trade has gone to the $50 profit, and then after reaching that $50 profit, the market returned back and maybe has gone to the $100 plus, and then started to return back. So that's where the fear comes in trading, fear of losing what we already have gained. Okay, so the fear of losing what already have been achieved, and that fear causes not to run the trade to its full potential. might be has gone to the $100 plus and then started to return back to probably $10, and then fear of losing what we already have, or maybe positive $50, and then started to move in the direction, and that's where the fear of losing what you already have causes a trader to lose. Okay, so this is the fear of losing what you already have gained so far. That's how the fear plays a vital role when we are trading. So this is a very important point to need to note down when we are working on developing trading psychology to trade the market. I hope that you guys understanding how the fear playing role in the new trading. What do you think, that what's your view on that? What is the prediction of gold for Tuesday open? All right, so gold is, we'll be posting the weekly forex forecast, and which is coming tomorrow, after tomorrow. Here so far it's still maintaining that bullish market structure. For me, I think still gold is moving in the direction of the trend. So if you look at here, this is the weekly price action. It might open with a gap, boom, bounce back up, or maybe gap down and then bounce, depending on what kind of opening. But where you can see here that all those green candles that you can see on XAUSD, those green candles are bullish candles, okay, with a daily narrow doji here. And you can see that in those situation on XAUSD, where this is a still maintaining a bullish market structure that we can see on this instrument. Okay, so XAUSD is still bullish, and we may see that the market is remaining bullish for long term. Now here is what we can see, going back to euro dollar to find out the market to possibly find a possible entry opportunity in this market. Let's wait to see where it might be heading. Here what you can see that on euro dollar, this is where a head, left shoulder, and the right shoulder, head and shoulder here, where the market is possibly to moving back up again in the major direction. Let's look at for that a structural formation on euro dollar. We are looking at the live chart to see if there is any trading opportunity. Here it is in a sideway movement at the moment on euro dollar. Let's look for that possible entry. A day, very important day for learning, which is I really like this kind of easy day for focusing on trading psychology and learning. Here where you can see that with this movement, the market in a pullback at the moment, and we will be looking for possible entry if we see the prices drop to that important support level here. That's why we will be looking for possible entry opportunity on euro dollar. You can see this is a head, left shoulder and the right shoulder, and we could see that some bearish move here, and that drop, if it drop here, that's where we will be able to find possible bullish opportunity again for an upside bias. But at the moment we can see the market in a very narrow range, which is happens as we saw yesterday. There was a news and the market was here in a completely choppy. So with that inverted head and shoulder, it managed to break. If it is coming back below here, we can look for possible entry to the upside. Now today is the bank holiday, but in this quiet day, that's where we look for the market to give us some structure that we can study. Let's understand what we need to study when we are looking for a market that is trending. Now, if you are a trader who really want to be a real trader, right? So there are many kinds of trader that you can find, but the real trader are those who knows that even if you have no matter how many winning trades or losing trades, you still going in that direction. Now, how do you maintain that confidence of becoming a trader when you know that the trade will work out in your favor? What do you need to consider? Two very essential component that if as a trader, either you are trading on 1 minute or in the 5 minutes or even an 1 hour, 4 hour. There was a saying, especially in the beginning, you'll find a lot of information that trading only in the higher time frame, don't trade on the lower time frame. But as a matter of fact, either you are trading on the higher time frame or in the lower time frame, as long as you are trading with the trend and you can identify the structure, you can remain profitable. And being a day trader, being able to trade on the lower time frame is a huge advantage. So what do I mean by this? Let's understand this market here. Euro dollar, 5 minutes. Okay, now what we see here with this breakdown from this downtrend, it moved in a sideway and then changed its trend. Now, how do you know that a market has changed trend? Which is no one exactly know ever. But when you look at that a market is trending, established trend after a reversal, that is where we need to look at the market for trading. Because when you see that in a sideway market, because when a market trend, let's say downtrend, it will not change that trend instantly. It's gonna have some kind of pattern before it changes its trend. So Rome is not built in one day, and also trend is not built in one day, right? So it built in, if it is a daily chart, then it might be quite a few days. If it is a 5-minute chart, then quite a few candles or structure needed to build a trend, and it's not gonna break in one go. So to keeping that in mind, when we see the market breaks out from a trend, rather than we think that it's reversed, we can think of buying that market. Okay, so this is one very important essential criteria of understanding when the market, when to trade and how to trade. The second thing that we need to look at is buying from an important support or resistance or a swing low or in a pullback or from a liquidity zone, depending on what kind of strategy you are using. When you can enter a trade from an important area of value and do the risk management, keep bigger profit target. Okay, so keep the bigger profit target and let the trade run itself. That's all you need, right? So that's all you need to become a successful trader. Now, if you don't have a strategy, then you need to find one. Finding a strategy is not hard. You can find a lot of strategies on channel, YouTube. Even you can learn, you can create your own strategy by backtesting, by observing the market, or you can learn our strategy that I am trading, TF strategy, if you want to increase your accuracy of becoming a trader. So increasing your accuracy means that having a strategy is essential, and at the same time having faith on the strategy is also essential. So how can you have faith on a strategy that you are trading, right? Which is very important. How can you have faith on the strategy that you are trading? You can have faith on the strategy you are trading by knowing that it's gonna make money over the long term, not short term. Okay, that's why the having faith on the strategy. And when you have faith on the strategy, you are well in the move of your trade. So once you have the strategy, you know that in what situation you will be buying, what kind of structure you want to see, what kind of pattern you want to see. The next thing is knowing that risk management and letting the trade to run itself. And once you know that you can let the trade run itself, you know the directional bias, you are in the move, and that's all you need to become a successful trader, in addition to developing or having a successful trading psychology. Successful means that you know, regardless of your trade, so the day your emotional state is not being highly impacted by the trade, that's where you develop the trading psychology that you need. And so this is the hardest part, right? Still, any experienced trader experience that emotion. Okay, emotional strategy, regardless of trading, even with other part in our life, can have an impact in our emotional state of becoming a trader. But once you can identify that, you become aware of that, and that will give you additional edge to run the trade to its full potential. So one thing is bigger profit target, risk management, buying from an important area of value. So bigger profit target, it sometimes appear as risk reward. You can keep that way or increasing slightly depending on your risk appetite. Also in the way you can do that, depending on what kind of strategy you are using. And if you want to do it simply, easily, then keep a bigger profit target, let the trade run, and then over time you'll see that your trading account will not lose as long as you are following that strategy as per the rules of the strategy. And that's also freedom, right? Because becoming a trader on the other side is freedom. As we discussed that earlier, the trading is boring, but it's huge freedom than going to 9 to 5, isn't it? Much more freedom. And that's the goal of becoming a trader, is to know that you are able to live freely, make money freely, doing in your time and not long enough, for a short period of time. So this is what we looking at as a trader. And I guess all of you are on the same page. What is your recommended entry for this trade? Now at the moment we see in a sideway, so you are not getting that entry point. Okay, so you see the market in a sideways, and here with this sideways market, you can see there is a bounce from this level, a move, and we could see that it's in a momentum. So with that momentum, we can see the market in this trend, and if we see the market is getting a strong rejection from that support level, that is where we will be able to see the market giving us that entry. At the moment in a sideways, and with that sideways market, I will be waiting for strong liquidity grab, especially from that support. If there is any entry, then we can look for, or we just keep it for learning in this volatile market. The volatility depends on the volume, as because of the bank holiday and public holidays, many areas, we could see that the market a little in slower in movement, but at the same time, as I mentioned, it's a great time for learning and growing as a trader. All right, so here is becoming, which is many traders don't. Becoming is more important than trading or doing, right? So the more you will be focusing on becoming, the better it is. You don't need to, or you don't want to rely on someone else to become a better trader, isn't it? Or yeah, you can learn from someone else to become a better trader, but for your trading, you don't want to rely on someone for the rest of your life. But you can become an independent trader by learning, so that you can rely on yourself, right? Which is very essential to become, rather than trading. So how can you become? So what is the difference between becoming and trading? So first day, if you realize that, how did you trade when you started your trading first day or second day or third day, or maybe in a month or so, and after you become experienced and learn all of that, have grown that, now what it is. Okay, so there is a big difference becoming a trader and trading, is because two things. One is trading, the other things, who is trading. So when you ask this question, started to realize that actually who is trading. So who is trading is more important than trading, and that who is what we need to work on to become a trader. So who is trading, when you ask that, that's what we'll find out, that actually to become a trader, you need to find out that how to develop that mindset, who can execute those trade over time, that will give you profitability. Now it is important that, a very important point is that, when you want to become a better trader, there will be always some kind of resistance, right? So that's what a trader must commit for long-term success. Look at the bigger picture always. Okay, so what you will become in 3 years time, 5 years time, 10 years time, and that is absolutely essential. I hope that you guys are enjoying the live session, understanding it, how it works. And when you understand how to develop the trading psychology that you need to become successful as a trader. Okay, so here is what you can see, that euro dollar from the 30 minutes and the 15 minutes perspective. We saw that move and it's in a sideways. I think from here we could see that drop here, grabbing that liquidity and then to trend again. So this is the level that waiting to see, possibly to test, and once we see it has given the enough price action confirmation, we can look for entry opportunity. Okay, so you see that drop back to that support level. Okay, so it's time to see what's the current structure on the lower time frame. This is the support here that looking to see. Sideways movement, and Well, let's look at here on this instrument, looking at that lower time frame price action. Here is where Euro USD. To see if there is any entry yet, we are looking for that possible entry. If there is, as we discussed, the market has a low volume in it. Now here is where the market dropped from that level, and because from this support level there is a bounce, we especially when the market drops aggressively with a one stronger momentum, when you see the market drops aggressively, that is where the probability is higher. Now dropping with aggressive momentum with a one single drop, that's where the better trading opportunity comes always. So which is another very important price action confirmation that I look at when I'm opening my position with the high probability setup. So when you see that, let's say, key level in any direction, the market drop to that key level in the major direction of the trend is up with a bigger candle, longer candle with a higher ATR candlestick pattern, it's a high probability the market will revert from that level, which is an important part of becoming a better trader. Now you can see that here, when the market trends, when it breaks from that trend, it creates opportunity. Okay, so a lot of opportunity. Either to buy or in a downtrend to sell when it shows this kind of pattern, which is that we are essentially looking at when we are trading on a, especially in a trending market. So you can see here in an uptrend, this is an uptrend and the market is trending with a momentum. That's where we're looking to see when we look for entry. So similarly, if you guys look at it, you can see that here is the previous important support level, which is the liquidity zone, and this drop, if this one is a single drop here, we could look for buying straight away from here. Now it's dropping slowly with a trend. That means that we might need to see a little time here how the price is coming, and if it is again returning in the major direction, or if it wants to break further below, depending on how it might be forming. So it's a low volume day, but at the same time it's something that we have, I believe that you guys have learned here significant a lesson, how to trade the market, what are the trading psychology, how to find the liquidity zone, how to understand the trend, how to trade based on price action. And this kind of quiet session is important for learning and growth, and I believe that you found value in it, as we are on bank holiday and coming up next week opening. So when we see the market opens after such a big holiday, that's where huge volume comes in the market. Looking forward to have a big trading week coming up, guys, next week, with gold and euro dollar, British pound US dollar, XA USD looks still bullish, and I will be posting analysis as well very soon with the weekly forex forecast. I would highly encourage you to watch them, all of them, and any question don't hesitate to ask. So with that being said, thank you for joining this live session. I will see you again trading live together on the other side. Until that, stay well, stay happy.